Hey guys, what's going on? It's Rekt Capital and welcome back to the Rekt Capital channel. Today we're going to be focusing on the death cross when the 50 exponential moving average crosses over with the 200 exponential moving average. And in this chart, the blue line is the 50 EMA and the 200 EMA is the black one. So we're going to look at a history of these death crosses, what that has meant for Bitcoin, and how many days does it roughly take for that death cross to happen, what sort of downside does it lead to, and my thoughts about this incoming potential death cross. Subscribe to the channel for more videos like this in the future, and let's dive right into the video. So this is the 2012 to 2014 period where we saw a golden cross, where we had a confirmed bull market, and for many months we saw upside followed by a death cross that confirmed a bear market. And you can see here, this is something that we really need to think about, because once we see a actual peak in Bitcoin's bull market, that doesn't necessarily mean that we're going to cross over straight away. In fact, it takes from the peak a certain amount of time before that death cross actually happens. And that's because these moving averages take into account a wide amount of days, meaning that it takes a while for these indicators to actually catch up with one another. They move a little bit slower. So for instance, the 200 daily exponential moving average takes into account the previous 200 days of price action and averages that out. So it takes a while for this 200 daily EMA to be able to adjust to incoming price action, which is why we see these lags. Of course, the 50 daily exponential moving average, which takes into account the previous 50 days worth of price action, that's going to be the faster moving average. So it's going to move a little bit faster. It's going to lag a little less than the longer 200 EMA. But in any case, these EMAs are lagging indicators in of themselves. One is of course faster, one is of course slower, but once they do cross over, that tends to confirm a bear market, or at least further downside in Bitcoin's price action. So now that we've got that out of the way, this is the 2012 to 2014 period where we see a golden cross preceded by fantastic upside, and then a death cross which precedes further downside. You see this in the 2016 period, golden cross right over here when the 50 EMA crosses over the black 200 EMA, and then you see these two moving averages essentially converge in parallel, but they're essentially moving together, never to cross over until they actually do. But of course, this doesn't time the peak of that bull market. But for investors, this is just a good indicator to give you an idea as to when the trend is shifting. So over here, you get a bottom in Bitcoin's price action, but it takes many days before we actually get that confirmed cross, and price has already appreciated a bit. So that's the lagging nature of the EMA. And you can see right over here we had a death cross which confirmed further downside, but of course a lot of downside had already actually occurred at this point. And then you see the golden cross here, death cross here, golden cross here, and potentially right now we might have an incoming death cross once again where the 50 daily exponential moving average could cross over the 200 daily EMA to confirm further downside, essentially, because historically that's been the case. So let's look at some of this downside, and let's look at how many days does it roughly take for that death cross to occur. So in 2012 to 2014, when we actually got that death cross, we saw price decline, crash 74% before that death cross occurred, and it took 135 days for Bitcoin to actually confirm that death cross. So that's quite a significant crash before we get that death cross. Quite a lot of days, a few months before we actually get that death cross. So it does take time, and a lot of downside occurs in the meantime. And this death cross just gives us an idea that we're going to see even more downside. But make no mistake, we can't catch the peak with a death cross. Some amount of months have to pass and substantial downside has to occur. So that's that period. 73% downside in 135 days before that death cross actually happens. In the next period, from the 2016 period to the 2018 period, you see a crash of 70% in 100 days before we actually get that death cross. So once again, comparing these two periods, it takes 70%. It's a 70% crash in both cases, essentially speaking, over 100 days before we actually get that death cross. So let's move on to the next example. In this market cycle where we topped out at 13,900, it took 150 days for the death cross to occur, and we only crashed 53%. So you can see that it took much longer, but the crash was much more shallow compared to these periods where we saw a crash of 70% and 73% in 107 to 135 days. So it's interesting to see, because if we assume 120 days, roughly speaking, so the historical norm is we see 107 days to 149 days from the peak to the actual death crossover. And we tend to see 70% to 50% downside for Bitcoin's price action before that crossover actually occurs. So we've already seen 54% downside, which is historically relatively accurate, though this was a failed bullish impulse wave. So you could potentially compare Bitcoin to these periods a little bit better, where we saw a 70% crash and a 73% crash before we actually got that death crossover. So 54%, potentially we could see a bit more downside before we get that crossover. But let's look at this in a bit more detail. But before we focus on this crossover that's looming large, let's focus on the downside that happens once that crossover happens. So in the 2014 period, it took 133 days for that crossover to happen. And once that crossover happened, of course, you saw some relief. But ultimately, from the time of that crossover, you see a crash of 71%. So not only did we see a 70% crash before that crossover occurred, from the peak to the crossover price, but you also see an additional 70% once that crossover happened, which is pretty diabolical in terms of downside. So that crossover can help you save 70% worth of downside, even if you are late to just de-risk from this peak. Moving on to the next period. From here, we crashed 70% again, but once that crossover happened, sure, a bit of a relief rally, but ultimately a downtrend. That was minus 65% deep. So a crash initially before the crossover, 70%, and then once the crossover happens, an additional 65%. So once again, that crossover can save you half of the downside that you have to experience once that crossover happens. And in this period, yes, it took around 50%, a 50% crash until the crossover happens. But then once that crossover happens, 50% more. So it's interesting to see, because we tend to see a crash that's around 50% until the death crossover happens, and then additional 50%. And that has been the case over these previous periods that we've been looking at. 50% crash and then 50% more once the crossover happens, 70% crash until the crossover happens, and once the crossover happens, 65% more. So it's approximately equal. And same thing here, 70% crash until the crossover happens, and once the crossover happens, 70% more downside. Really interesting symmetry here. So bearing all of these things in mind, historically speaking, from the peak of the bull market, it takes Bitcoin from 107 days to 149 days to finally cross over. So if we were to try and pinpoint a period of time where that crossover actually happens, this crossover could happen between pretty much August, late July, early August, and mid-September, depending on how long we have to wait for that crossover to happen. But if you just look at these two moving averages, the 50 moving average and the 200 moving average, they're converging quite quickly. So I don't know if we will get a def crossover later down the line in early August. At this point, we could see, of course, it really does depend on how price continues. If price appreciates, then these two converging EMAs could actually start to level out and start to diverge. So really important to just know that with incoming price action, you can see this divergence start to occur if we get price action towards the upside, because at the moment they are diverging, looming across, trying to tease across, but that cross is nowhere near at the moment. It will still take a bit of time for that cross to occur, and if we see price action go towards the upside, we'll actually see divergence rather than convergence, and that divergence would enable price to not actually cross over. So this could still take some time. Will it take that much time though, of around 100 days? It hasn't been that many weeks since the peak, around mid-April to early June, so that's only a month and a half. Roughly speaking, 45 days. So by history standard, 100 to 150 days, well, 45 days is definitely below the norm when it comes to how long it takes from the peak of the bull market until the actual crossover to actually occur. But also we have to bear in mind that it's not quite clear that this is the end of the bull market. So in fact, if we do see divergence continued, then we won't see that def cross, right? And we'll notice that it isn't a def cross market cycle where we're going to see additional downside and effectively a bear market. So really important to watch out for the convergence or potential divergence if we see further price action towards the upside, because we might see these two moving averages not actually cross over, and that would be actually very positive for the bull trend. But in any case, at this pace, if we continue to see the 50 EMA and the 200 EMA continue on course as they have been, then we might get a crossover in mid-June, which is quite interesting. But of course, this timeline doesn't bear in mind a potential divergence from each other. So if things remain constant, and it's difficult for those things to remain constant because Bitcoin isn't going to consolidate here forever, if things move or at least stay constant, then a crossover will happen in mid-June. But then again, we're probably going to break out from this period, or even if we break down from this consolidation period, that's going to have an influence on these EMAs. So this EMA trajectory, both for the 200 EMA and the 50 EMA, that won't happen. They will have to change if we see an increase in price action or even a breakdown. But in any case, let's assume that things stay constant and things happen a little bit quicker, and we don't get that early August, mid-September period where we actually do see a def cross, and we get that def cross much sooner because, Bitcoin's consolidating here forever and the EMAs just start to converge and they cross over finally. If we do get that def cross, and it doesn't have to actually happen, but even if we do, let's just assume that there will be a def cross. Let's just assume that. In the past, historically, we've seen a 55% decline, a 65% decline, and a 71% decline in price action after the def cross happened. If we see a 55% drop, that would mean that Bitcoin would drop to 18k, and of course, as I mentioned in my previous video, Bitcoin has never retested its old all-time high before going even higher. So that's a big if, 18k. But if we do see a 65% drop, 14k, less likely, and a 71% drop, 11k, that's even less likely. But let's just go back to this symmetry situation where if we crash, let's say the def cross occurs today, and now that Bitcoin has declined 55% roughly speaking, once that def cross occurs now, it's likely that we'll see the same downside after the death cross, right? Right, because that's been the case in the past, that if we see a 75% crash and then the death cross happens, then another 73% crash happens, right? We've seen this throughout today's video. So now that we've seen a 54% crash since 65k to current prices of 36k, if the death cross happens today, then that means we will probably see this situation pan out where 55% downside occurs to 18k. But these are all hypotheticals. There's a lot of moving parts here, but I just want to offer this information to you just so that you understand what sort of downside could happen if a death cross happens, the symmetry between a crash until the death cross and then the same sort of crash further towards the downside that happens after that death cross actually happens, and how long it actually takes for the death cross to happen, historically speaking, and what to look out for, convergence, divergence in the EMAs. Loads of things to bear in mind. But let's assume the death cross happens today, so we'll see a 35 or at least a 55% crash additionally on top of the 53% crash we've seen from the highs. On top of that, we'll see another 55% crash. Then that would interestingly tie in with the previous video where I spoke about the 200 weekly exponential moving average, which tends to serve as a saving grace for the trend and provides fantastic ROI in terms of financial opportunity for Bitcoin's price action. In the past, just check out that video, guys. It's really great in terms of showing you why this 200 weekly exponential moving average is so useful in identifying outsized potential returns for a Bitcoin position at the 200 EMA and preferably even lower than it, because we tend to see either accumulation phases below this 200 weekly EMA before a new trend, or just snapping capitulation below the EMA before going back towards the upside into a new bull trend. So it'd be interesting if we see an additional 55% crash, that would bring price to around the 18k region, which has confluence with this 18k region right over here. So that's about it, guys, for the video. Subscribe to the channel if you enjoyed this video, and of course like the video if you'd like to see more videos like this in the future. Lots of things to bear in mind. A death cross may be looming, but there are so many things that can still change in the interim, and we might have to wait a long time before the death cross happens. But once the death cross happens, we need to be aware of the amount of downside that could still happen after the death cross actually occurs. But at the moment, no death cross has happened yet. And in fact, we might and could, it is a possibility that we could see divergence if Bitcoin's price action starts to recover from this consolidation period. That's about it, guys. Thanks so much for watching today. Subscribe to the channel for more videos like this in the future. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.